me start the recording because I want to get that on the recording.
So, Maria, if you have a question, just type it in the box. I see that you have your hand
Here
up.
it is. All right, good afternoon, everyone. Today is October 12th, 2012. Showing Dwayne's results right here. These are his soybean results for the week. Okay, he had another soybean trade today for 15 ticks, I believe, was today's trade. He had one for 30 ticks a couple days ago. All right. Now I'm going to grab the charts and put them back on my computer, but I just wanted to show Dwayne's DOM because he put that one out in the live trading room this morning, that 15 tick trade. And I will go over that in just a moment. Okay. Let's see. Here we go. All right. Before I go too much further, let me just give you the results. I have 9 ticks profit in gold. I did have 1 tick profit, guys, and I took another trade. I have 4 ticks profit on the NQ. I'll go over everything that I did in the live trading room this morning in just a few minutes here. And I'll go over Dwayne's trade as well. But before I do that, if you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. All we need is your name and your email address, and you will be sent an email with instructions to download everything that you see here, all the indicators, the charting platform, everything that you see here. Okay? And you will also get 5 days in our live trading room, 2 hours per day. That's 10 hours that we will give you to watch our stuff work live, real-time, trading in live markets, and opportunities for you to ask questions. Okay? That said, let's go. We did the results, right? Dwayne had 15 ticks profit on the soybeans this morning. I had 4 ticks on the NQ. I was up a lot more on the gold, but I had 2 losing trades toward the end of the day. That dropped me down 16 ticks. But anyway, I'm up 9 ticks on the gold right now. The soybean, since that was the big winner of the day, let's start off with that one. All right. This morning, we were talking right in here. Before this move down happened over here, and price was right about here, we were talking about opportunities in soybeans right after it opened up here at 10:30. There was an opportunity right here. We had bearish divergence, a bearish cross, a pullback and test of the BBC with a down close, and we had an opportunity to short right there 1 minute after the open and take some profit. Once it was down here, Dwayne and I were talking about the soybeans and how they can be, they can move quickly at the open. And Dwayne said, I like a short below 1530. And I said, okay, now what we should do is look for an opportunity to short down to 1530. And if you're in the thing when you get down to 1530, you can lock in some profit. Or you could just put a sell stop in down there at 1530. You could actually double your position if you wanted to and take the risk off the first one, which would essentially make you in a risk-free trade, twice as wide, or with twice as many contracts. I won't get into that right now. But anyway, what happened was it pulled back up here, tested the BBC, and gave a down close with the big bearish divergence here. Okay. From that, it went right down to 1530, and down there is where Dwayne had his sell stop on. It entered him in there, and then it proceeded to go all the way down here to 1526. We were looking for 1526 and a quarter, right? Is that what we were looking for? 2650? Something like that. But it dropped right down there, almost to the tick of where we were expecting it to go, and then it pulled back up. It almost pulled back up to the yellow brick road right here with a red on it, but it didn't quite go far enough. It pulled back down after that. You can see we had a bearish cross, tested the BBC with a down close right there with a little tiny bit of divergence down here. It did it again right here with more divergence right there. Then it pulled up here. You see we lost the divergence down here, so you're not looking to short that thing. By the time it got up here, when it painted red, the MA1 was above the BBC, so that painting red, it's a bar late, so we weren't looking to get short in there. It dropped right through the BBC again. This time, when it dropped down and it hit the blue right here, that was a trading opportunity right there. It pulled up off of that. This is one of those places where we have conflicting signals because the regular 4-tick range is going to give you a shorting opportunity right here. Almost a shorting opportunity right here. There was just a little space and just a little divergence. Either way, I would have said trade the yellow brick road here, trade that up to the BBC at least, and then take your risk off the trade. You can see there were more opportunities here in the soybeans this morning, right there. And over here we lost the divergence. Over here we didn't hit the BBC. And that brings us to where we are now. So right now we have bullish divergence, you see. And if it touches the BBC and gives us an up close, that would be an opportunity to get long. All right. That is the soybeans. Now this is a 4-tick range trade. The setups that we used on the 4-tick range, this one, this one, they're the same on all the 4-tick range charts. Okay, every single 4-tick range chart is going to have the same setup. All right, on the ES, I didn't trade the ES at all this morning. I didn't trade the YM at all either. I'll look at them quickly, but I didn't put any trades on. Okay, I have a lot of lines on here. We were in and around the weekly trading zone most of the morning here, and on the YM we were on the other side of a weekly trading zone. So we didn't do anything. We didn't do anything with either market. Okay, we just let them go. There was one opportunity I was watching over here this morning. It was toward the end of the morning session, and we put in a lower high pivot. Jim, are you in here right now? I got your email. Hang on, let me just scroll up and look at all the folks that are in here. No, he's not. Okay, we got a lower high pivot right here. That, for me, disqualified the trade unless it was going to fill on this blue bar right here. It didn't happen, so I took the trade off. It dropped down. You know, by the end of the day, what time is it? It's 12:32, so we have about 4 hours left for this thing to get back up here above 14.28. That's what we're expecting it to do. You know, it's got about a 10% chance of it closing down here below 14.28. 10% over, 2 years. That would happen. But we'll see. We'll see if it does or doesn't. Either way, we're going to trade what's in front of us. You can see right here it pulled back up. It didn't give any opportunities. And then in the break right here, we had a bullish cross, but we haven't had to pull away from the BBC above it. So there's nothing there on the ES. Just nothing. On the YM, I had drawn this trend line. I don't know when or where or why I drew that trend line, but but I did. This, let's go back. I know I drew this one from the morning. All right, we were following this trend line that I drew on here. Once it broke down below that trend line, it really opened up the door to lower prices. Unfortunately, we didn't have any pullbacks until right over here. Okay, and this was during the break, so we were not looking to get any trades off there. Right in here, we had a pullback right here, but we had this little problem right here with the lower high right there. Okay, we had that little problem with the lower high, and that's it. All right, that was it for the YM. I didn't take a single trade on the YM. We did have a pierce of the envelope over here, and it did drop significantly after that. We also had a pierce of the envelope over here on the ES, and it dropped 5 points before it even pulled back up to give us an opportunity to short. Okay. Let's see. That was the ES, the YM. I did the soybeans. We can take a quick look at the 6E. I didn't trade the 6E this morning, but you can see that it had plenty of opportunity here off the yellow brick road and off the regular 4-tick range setups. Okay. You can see we had bullish cross, tested the BBC and an up close. That gave about 6 ticks. Then it pulled down to the yellow brick road with the blue on it right there for a nice move up. It pulled back down here again, tested the BBC with an up close right there with bullish divergence on the slingshot, and it moved it up. Okay. This happened several times this morning. Several times. Okay. So it worked well again over there, as it does pretty much daily. And right now on the 6E, we are looking at nothing because the cycle portion of the slingshot has lost its divergence here. It's moving back against it. Okay, so the 6E is done. The NQ is the next one. That's what I'm going to do next. All right. Let's see. This is the trade that I took on the NQ this morning. I shorted off the yellow brick road right here. I took profit when it got down here to the MA1 in the BBC. Okay, but there were plenty of opportunities this morning. I just wasn't able to take them all. All right, we had a bearish cross, pull back up, tested the BBC with a down close with bearish divergence. Again, guys, same exact trade setup, same indicator set, same everything. All right, it's the 4-tick range. All the 4-tick range charts have the same exact thing. Okay, we do the same thing on all the 4-tick range charts. And I see a hand up out there. Oh, that's Frank. Okay, I see. Frank's making comments more than asking questions, right? Thanks, and I appreciate that. Let's see. All right. Now, there were plenty of opportunities in here. I've highlighted a bunch of them, but not all of them. Okay, you can see these were all pulling back up to the yellow brick road, yellow brick road, yellow brick road, yellow brick road. Here was one that pulled down to it right here. And this dropped through, let's see if it dropped through 8 ticks. 22.5 down to 20.5. So that did drop 8 ticks. This one right here would have stopped us out. When was that? I didn't see it. I didn't see it happening, but hey, Mike Reed's in the house. Okay. I can. Okay. Gotcha. And then it pulled back up and it hit the yellow brick road right here for a short down. Okay. It did it again over here. And over here, what time was that one? 11:02. It looks like it dropped right through it here. What we anticipate when it does this, when it pulls back to a colored area on the yellow brick road, is we anticipate at least 1 bar's profit in the trade. Okay, if it moves 1 bar in favor, then that's a good time for you to take your risk off the trade. All right, but you anticipate at least that much. This was the one that was in question just a minute ago, and it doesn't look like it gave 1 bar's profit. So that one right there would have been a losing trade as well. You know, a couple of small losing trades like that when you have winning trades like this, and you know, this and this, and that would have been a losing trade. That would have been a winning trade. Winning, 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 winning. Who was that? Charlie Sheen, right? Anyway, those were all trades off of the yellow brick road. Now over here you look at the bullish cross, the test of the BBC and the up close with the bullish divergence. So we had all of these regular 4-tick range trades making money as well. Okay, if you wanted to just trade the NQ. Okay, you had all these opportunities here. All right. Now, when I say if you wanted to just trade the NQ, it's because you really would have to focus to get all these trades. You know, if you don't focus, you'll get probably half of them. You know, once you figure out how the trade setups all work. But all in all, I think we had 2 losing trades in there, and you can see all the other trades that were winning trades. All right, trades that went on to make at least 1 bar's profit. All these highlighted areas. Okay. And I'm sure you guys are saying, well, why didn't you take more of them? The live trading room was a very busy place for me in the morning. Okay, it just is. You know, we're doing a lot of stuff to keep everybody on track. And gold, I traded a lot of gold this morning. Okay, I had a couple of losing trades. I ended the morning with a couple of losing trades, but I started out with a winning trade right here. I sold the yellow brick road right over here. Okay. I sold the yellow brick road right over here. Then we had a bullish cross test of the BBC with an up close. You could have, we didn't have any divergence to support it. But at the break of the yellow line right here, you could have bought right there for some profit. Again, over here, you could have bought right here for some profit. Sold here with the regular 4-tick range setup for some profit. There again for some profit. Here for some profit. I actually did this. I sold here at the yellow brick road and took profit down here at the BBC. And then you could have bought the BBC on the up close right here because you had bullish divergence right here. All right, suggesting that It was looking for an area of support, and it found it at the BBC, and it was going to push up from there. I bought the yellow brick road over here and took some profit. Let's see, in here we didn't have any divergence down here to sell, so we couldn't do that one. I sold this one, but at the time this morning I had everything off of the charts except for the yellow brick road, and I was giving an explanation about the yellow brick road. And when the yellow brick road flipped in the opposite direction on me, I took profit right away. I took like just 1 tick profit on that. But you can see it dropped down and gave, I think, 12 ticks profit, right after I got out of the trade. It turned around then and had a bullish cross, tested the BBC with an up close, bullish divergence, profit, profit. This one stopped me out just about to the tick. It dropped right through it and stopped me out just about to the tick on that one. Then I sold up here, okay, when really I should have been long going right up through there. I sold up there. And I lost. So I lost 8 ticks on this, and I lost 8 ticks on that. And right here we had a bearish cross, tested the BBC with a down close with the big bearish divergence down here on the bottom. Okay, again, it's a 4-tick range, guys. No matter what market you're looking at, we're looking at a 4-tick range. Every 4-tick range chart uses the same exact setups, the same set of indicators, the same everything. No matter what market you're trading, it's the same thing across all of them. All right, it's the theory behind it that works. It's not some magical time frame or something like that. Okay. And Gary, I see your question. Why did I come up with 4 ticks by trial and error? I'll answer that in just a minute. Okay. Down close over here. We tested the BBC and gave a down close, but we lost our divergence down here. Over here, I got long. This was during the break. I got long after the bullish cross, tested the BBC, and gave an up close with the bullish divergence again right there. This was an A-grade trade. This stayed blue and this stayed blue on the pullback and the up close. We actually just had another opportunity to short right over here, and another A-grade trade. Oh, nope, that was a B-grade trade right here. Right there was an opportunity to short, and another one right here. It didn't put in a lower swing, so this one right here you can't have great expectations on. But it gave profit anyway. It's actually got bullish divergence now, and it's really chopping sideways. But that was gold. The 4 ticks. This is a 4-tick range chart. It's not 4 ticks. What that means is every bar is 4 ticks in height. And to simplify the whole learning process, as I move around, I have 1, 2, 3, I think there's 8 markets, right? 1, 2, 3, 4, 5, 6, 7, 8. Yeah, there's 8 different markets that I'm looking at in at any given moment, and simplifying the process when you're doing that much makes it easier. So I use 4-tick ranges because with that I know on every market I'm comfortable with the risk being 8 ticks. Okay, because that's going to give me 2 bars. 2 bars. Now usually where our entries are, like right here for instance, your drawdown is not going to be more than 1 bar against you. Usually, if you're going to have a drawdown, it's not usually going to be more than 1 bar against you. So if you have 2 bars of room in there, then that gives you more space. Okay, usually gives you enough space. And if it's going to totally go against you, then you're going to lose 2 bars worth of profit. The way that I look at it, it's a comfortable risk for me on every single market. So I can trade 8 ticks risk on every market, and on all the 4-tick range charts, that's 2 bars. On the Russell, for instance, that's $80 a contract. On gold, it's $80 a contract. On the ES and SoyBeans, it's $100 a contract. On the NQ and the YM, it's $40 a contract. So I'm comfortable with it no matter what it is, no matter what market it is. Okay. Let's see, there was another one. So the location of the cycle line does not matter. It's the relationship between the green line and the cycle line. The green line and the cycle line. Are you talking about divergence, Kevin? I think that's what you're talking about. I prefer to have it be total divergence, but it doesn't have to be. Okay, it's the relationship between the green line and the cycle line. You know, if it's going down strong like this, and you have this little bit of divergence right here, this is actually a momentum trade. When the green flipped back down right here, you could have just jumped right in the market and shorted that. That's a different thing. Michael G, the yellow line is called the yellow brick road. Okay, it's a new indicator. We've had it for about a month now. I think we've been showing it under a couple different names though. And we've now settled on the yellow brick road, and it's I think everybody would agree that it's a pretty good thing. If the cycle line, you're usually not going to have that. But if the cycle line is on top and it's a long trade developing, then you're going to have bullish divergence. Yeah, that's what you would prefer to have. Okay, that Dwayne just said. One of our partners, Dwayne and Frank, they're commenting on the yellow brick road. It's been very helpful, and it's a stellar thing. Let's see. I wanted to run through a couple other markets here with you. Yellow brick road stuff mostly. This is the Russell. You can see, let's see, from the open, right here at 9:30 at the open. Right there, it pulled up to it, nailed it, dropped off it, did it again right there. We had a regular setup right here. Now on this one, in the live trading room this morning, after this one moved down and didn't put in a lower swing, I had said I wouldn't be as interested in trading it again if it pulled back up to it. And it did right there. It bounced off of this one. You know, what I anticipate is at least 1 bar's length bounce off it. This one gave 2. This and this and this. And this was just a regular trade setup right here. We had bearish divergence, pull back and tested the BBC with a down close. I was actually looking for this one to pull back up to the yellow brick road, but it stopped at the BBC this time. Frank said he really likes it when there's 2 bars touching like this right here, and then it bounces off. And I've heard that from other people too, Frank. That's a good thing. Right in here it drops, right in here it dropped, right here it dropped through it, but it ended up going up and hitting the other side right there. Okay, that was the Russell this morning. I'm not going to drag it out too long. I know Mike Reed's in the green room. Crude oil was just more of the same. Okay. All right, I'm going to end my recording here by saying if you have not taken a free trial with us, go to www.cfrn.net/apply. If you have taken a free trial with us and you want to become a partner, become a partner now. If you're at the end of your free trial and your stuff's going to expire, let us know now so we can get this stuff taken care of over at Daniel's Trading so nothing expires and you'll have the whole weekend to look it over. Okay? That's it. I'm going to wrap up the recording now.